Hello everyone, today is Friday, November 26th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video series. I was going to take this week off and I am going to keep this video brief, but because we had so much turbulence, so much movement this week, I figured I had to at least touch upon some of the developments here that went on, particularly Friday's session, but really all week we saw continued volatility on this 3.5 day trading week. So let's run through. I'm going to skip the data portion in part one. I want to just jump into the charts, take a look at some of this price action. We are going to be a little more brief today, but we'll be back in action next week with some more analysis. And I do want to take this moment here to remind everyone that we are running our Black Friday sale. This week ends on a Monday, I believe, and we've got discounts up to almost 50% off across services and scans, indicators for TC2000, our TR150 watch list, trading systems, all the good stuff is currently discounted. So take advantage of it. If you're looking for new trading systems, new scans, new setups, new ideas, some help into the new year, check out if we can do just that for you. So you can go to thetraderist.com/Black-Friday, or there's a banner in the bottom right you can click on. Now let's jump into these charts. So let's kick things off here with our usual weekly perspective here. So long-term perspective. So we're looking at what I would consider just a multi-month view of markets. And we're looking at our smart trend filter indicator applied to these charts. And we can see here that we had some transitions going on this week, but the S&P in the top left and the Nasdaq in the top right are still in this long-term uptrend, right? So whenever we get big sell-offs or just big market movements, the core theme that I always like to try and remind people is that time frame matters. And if you're a short-term active trader, we have traders that are day traders watching this, swing traders, and then we have the longer-term position traders. So it's hard to speak, obviously, in one sentence to everyone. So you have to figure out where this analysis, where this overview applies to your framework. But when we start here from the weekly time frame, you can see that we are still in this uptrend in the S&P 500, still printing green dots here based on price, volume, looking back over multiple weeks. Everything still is in that long-term uptrend. Same thing for the Nasdaq. Take a look at the Russell. This is where we got some changing of the guards here. So the Russell, of course, was the breakout that was underway over the past several weeks, has looking like it wants to be a big head fake. And we're going to talk about that in just a moment. You can see we're back to neutral here. Same thing with the ACWX international stocks, back to neutral as well. Let's go to our shorter term time frame, a daily chart, right? Which is, again, perspective matters. So for some of you, this might still be a long time, but looking back over the past 2 weeks, let's call it, and you can see that we are in the transition state here for the S&P 500. If we come into the next week, or essentially not getting an aggressive rebound right away, then this is probably going to transition lower to our first sell signal since early October. Same thing with Nasdaq. We'll probably get our first sell signal since early to mid-October as well. The Russell 2000 already produced a sell signal here on Wednesday, and the ACWX international stocks produced a sell signal on the 19th. So if you're looking at the shorter term trends here, we are breaking down, reversing in the other direction. Now let's take a look here at some candlestick analysis. Let's get a little bit tighter on our levels and pay attention to what's going on here. So here's the S&P 500 cash settled market, and you can see, of course, the big session that happened here on Friday. Now, of course, we can point to the headlines that certainly exacerbated sort of the selling pressure. We've got this new COVID variant that seems to be more aggressive than everything else, and the headlines look pretty grim on sort of the new developments out of there, and that certainly is what's spooking the market here and giving it the excuse to really sort of escape to the downside. And so when I look at this S&P 500 chart, we finally are getting a change of character here, right? Today's session, Friday's session, is, essentially the way I like to think of it is not something that should have happened in a bullish scenario, right? This crash through, this breakdown through this little range, this prior pivot here, this consolidation area, this is aggressive, this is heavier volume, this is an expansion in range, this is a weak close, this is everything you essentially don't want to see in a bullish market. Now, it is possible here, okay, and this is where the bulls can, maybe get a little bit of hope here, is it is possible that we just reached some capitulation days here, right? Margin calls and everything else, the panic, the VIX spiking 50% or 40% or whatever it was up today. What was it? Yeah, 54%. So this could be your clear washout day. And again, coming in on Monday, I think that tone will be interesting on how the market sets. If we just aggressively V-bottom bounce from here, then, we can maybe look at this in the rearview mirror and say, okay, we got a nice rug pull here, and maybe we can go off to the races from there. But right now, that is not necessarily the high probability scenario I'm looking at this point. I'd say today is definitely Friday session was definitely a day where I'm taking notice of the change of character here. So for the S&P 500, the way I view this now is I want to see us quickly and aggressively get back over 4640. That's the approximate zone here. Reclaim this prior pivot, get back up into this consolidation. If we can do that on Monday, then again, maybe maybe we can save ourselves here. But until and if that happens, I've got to look at lower levels here and this 45 area. So this is the prior September highs. This is the next nearby reference zone. Seems likely we can get back down here. I mean, at this point, it's only 1% away. So again, we could easily see that on Monday, and that retest here would be relevant. And then you can see this level back below that around 44.90 is the next smaller sort of relevant little pivot area that I've had in here in this gap fill for some time. So that's essentially the way I'm looking at this market here in terms of levels. I'm looking to get over 46.40 on the upside. On the downside, some type of retest of this 45.50 area back in the September highs here is what I'm looking at. And if it starts to fall down there, then, of course, we fall back into this old summer range or late fall, early fall range. So that's what I'm looking at here for the S&P 500. If we throw Bollinger Bands on this, you can see we're very quickly back to a rising and inclining, lower Bollinger Band here. So this is, generally speaking, a spot where you'd expect to see the market maybe try and hang in here. But obviously, if we're repricing and going into a different type of environment, then that might not be the case. So let's go to the Russell 2000. So the Russell 2000 here certainly had a big move on Friday. It was down almost 4% on the session, and we clearly lost and fell back into this old range here. So remember, I've had this trade. I've been updating everyone about this position I had in here, and I definitely took some action this week and closed it out. So let's talk about it. So this trade that I had on in the IWM started back in September, late September or so. Basically started accumulating the IWM right around here, actually, right in the low 220s. I purchased it a couple of times. If you dial back the old market recap videos, I think I highlighted almost every time I made a purchase. But essentially, I accumulated Russell here, was looking for this accumulation breakout, looking for this range breakout. And of course, was victorious here for basically a couple of weeks. I was lucky enough to sell basically 1/3 of the position off on this Monday, the 8th. So I got very fortunate here on that timing. But basically, as it got extended to the upside, I peeled 1/3 of that off. And the way I was managing this trade, which was discussed last week, was I was essentially looking at a weekly time frame here, and I wanted to see the Russell 2000 stay over this 230, lower 230s on a closing weekly basis, right? So anywhere from 230 to 233 or so is what I wanted to see that weekly close stay above. And obviously with this week's close, 6 points below that intended area, we are back into this old range. So that breakout that I was playing for, no longer in play. And so I exited this position. I should note that I also added back some position here on the 19th. So basically peeled off that third up here. I added about 25-30% back here, almost made it a full position again. And then essentially sold out of everything right at the open here today around 225, and that was it. Or I'm sorry, not 225. At 225, I believe was the open. Double check that one more time. Yeah, 225. So that's it. That was the trade. All in all, it had to have been a loser, small loser overall, because I had a combination of options in stock here. But basically, I'm out of this position right now and just going to sit on the sidelines. We are definitely extended to the downside. We could see some nice gap fill here easily, but until and if it can prove it can get back over this consolidation, I'm going to sit this one out and no longer have that position. You can also see the monthly chart here. Throw in a monthly picture of the Russell 2000. This illustrates what's going on here this week as well. You can see, or I'm sorry, this month, but you see this nice rejection of the highs up here back into this range, and you know, back into just nowhere, no man's land for again pretty much all of 2021. So that's the way that stands. If we look at the Qs here real quick, very similar to well, holding up the best, more similar to the S&P 500, but still holding up better, because see, if you draw sort of the relative trajectory here, so the S&P 500 kind of cratered through this pivot low from early November, Qs are still holding above it. So, you know, on a relative basis, Qs definitely looking a lot better than pretty much anywhere else in the market at this point. So the Qs hanging on here, you could arguably, you know, have some type of pairs trade on, be long Qs, short IWM or short SPY or something like that. And is, you know, if this continues to hold above 386, 387, then that'll be pretty good. You know, that'll be a great development here for the bull case. So Qs showing that relative strength, hanging on here. If we start breaking down from this level, then just like we looked at the S&P 500, going to look back to those September highs and then some of the lower levels back in here. So that's the overall market. Change of character, some expansions in range, spike in volatility, high volume on an otherwise what should have been, or you know, usually is a historically quiet, calm week. So that's the way the market developed. If we take quick look at just three other markets here, we look at the VIX up 50%. So definitely protection being bought up here and well above this 20 zone here. And so again, more potential regime changes here. Obviously, there are lots of traders that are going to want to fade a 50% pop in the VIX like this. Volatility is mean reverting, but obviously, you know, look no further than February of 2020, and you can see that you know, volatility can certainly, when it wants to change directions here and change regimes, go into backwardation, then obviously this thing can really soar. So you got to be careful here on this transition point, but clearly some fear coming in there today. If we look at the USO, you can see this had a huge move. So oil down 11% in a single day. That's pretty big. Obviously big range here, heavy volume. That's notable. And then you could also take a look at, say, TLT, which was a beneficiary today. And you could certainly see 2.5% move, fear moving back into bonds, rates falling, and you know, a little bit of a safety trade going on here on the TLT. So that's all of sort of the developing, changing market environment. It's going to be real fascinating to see how we finish up the month of November and how we, you know, essentially go into year end here. So that is the landscape. And hopefully everyone had a good Thanksgiving Day holiday. Hopefully the markets didn't spoil too much for you on Friday, but we definitely have some things to sort of take notice of, and we'll be following that next week. So don't forget, Black Friday sale. Check it out on our website. Hope you have a great weekend. Back next week with our full-length videos and analysis. Thanks so much.